not earning. It means they are getting on free of cost, right? That is unearned income. We call it as transfer of payments. For example, student scholarship, they are getting income, right? Legal income also. But thing is that nothing is earned by them, right? Old age pension, right? So in certain circumstances, some people are getting income without production of goods and services. Such income is categorized into transfer of payments. Transfer of payments. I think it's here, right? So such transfer of payments and earned income. In certain circumstances, earned but not enjoyed, that also is covered. So here, yes, earned but not enjoyed, okay. These are obtained in personal income, right? Okay, I think it's here. Yes. So it is understood that, right, we have three types of incomes. Yeah, one is earned income. Generally, national income is taken here, right? Personal income is equals to earned income. Then next one is unearned income. Unearned income, right? So here, right, it is transfer of payments. For example, scholarship. For example, scholarship. For example, unemployment allowance. Unemployment allowance. Then payment to refugees. Refugees, isn't it? Right. So that's why they are getting income, but without producing goods and services. Whereas in the case of earned people, they are producing either good or service, then only they get the income. I think it's clear. Yes. So next category, in certain circumstances, earned but not enjoyed. Such income also visible in personal income. How it is explained? I have to explain. You see here, for example, UCP is there, undistributed company profits, right? Undistributed company profits. In certain circumstances, right, company keeps some amount aside for the development of the further development of the company. For example, I have to give. One company got 100 CR. Okay. This total 100 CR not distributed among the factors. For example, 10 crores kept aside, right? Okay, that is undistributed company profits. These 10 crores not distributed among the factors. I think it's clear. Every company, out of their profits, some amount to keep aside. What purpose? The kept amount can be used for further development of the company, right? In certain circumstances, for example, some unforeseen conditions may be prevail, uncertainty taking place. In order to counter such uncertainty, some amount is needed. I think it's here. That's why some amount kept aside from the profits, that is undistributed company profits. It is earned by the factors, but they are not getting. I think it's here. Next one is here social donations. You see here, every company, out of their profits, around 2% of their profits to be kept aside, right? The amount given to society. I think it's clear. Why? Because from society only, firm is existed. That is corporate social responsibility. Every company, out of their profits, 2% of their profits must be kept outside, right? It is given to the society. That is social donations. First one, kept in the firm itself for the development of the future company development. I think it's clear. So here, so next one is CIT, corporation income tax is there. Corporation tax means here, right, some companies, right, getting net income. So they need to pay the right amount to government in terms of tax, that is corporation income tax. So from the right factors only, from earned income only. So this is given to governments. I think it's government. So UCP kept in the form itself. Social donations given to the society. Then CIT given to the government. What you understood? All these are earned by the factors, but they are not enjoyed. Just simply some amount given right to the society, some amount is given to the right government, some amount kept in the farm itself. I think it's here. Yes. So in a personal income, you can see three types of income. Right? Okay. In certain circumstances, for example, one person is earning income, but he has to pay some penalties. Right? Okay. It means it is not personal. We have to deduct it. Okay. For example, fines, penalties, right? So many, some disruption, some loss, also, right? Not personal income. We should try to deduct. I think it's clear. So it is understood that personal income shows not one person income, not average person income, but total persons in the country. Total persons means earned community, unearned community, and also earned but not enjoyed also can be obtained in a personal income. I think it's clear. Nice. Okay, now we should try to move forward. I think it's clear. Yeah. So PI. Now we should try to take formula here. So PI is equals to NI. As I told you, earned finish minus you see it, UCP minus SD minus CIT. Okay. So plus TP. I think it's here. Yes. So here earned income. This is the earned income, right? But not enjoyed by the earned people. They earn, that's all, but they can't enjoy. As I mentioned, explained now itself, you might have observed. So some amount earned is kept aside for the development of the company. Some amount given to society in terms of social donations. Officially we call it as corporate social responsibility. And some amount from earned given to the government, that is not gross income or net income, that tax is generally older companies need to pay 22% CIT, then a newer company need to pay the 15%, right, as a CIT. I think it's clear. Yes. The next one is here, the third element here which is visible, that is TP, transfer of payments. Transfer of payments means here unearned. Some people, as I mentioned now itself, right, student scholarship may be there, right, unemployment allowance there, right, senior citizens, right, pension also there, like this. It is understood that personal income shows the income of different people. Different means here earned people, unearned people, earned but not enjoyed. In certain circumstances, right, even though we earned the money, in certain circumstances, some penalties may be paid, fines may be paid, right? Okay, these are to be deducted, right, subtracted, right? We can't enjoy, right? I think it's clear. Yes. So here, this is the formula of personal income. Okay, now we should try to move into the area. So yes, again I have to write yes, mention about it right here. NI already you know, national income, earned income, UCP, undistributed company profits, undistributed, right, undistributed company profits, company profits, over. The next one is SD, social donation, CSR, then here corporation income tax. I think it's here. Yes, this is personal income. So personal income, it doesn't mean that it is the only one person income. Personal income doesn't mean that it is all persons average income. Yes, it is the income of different people, earned people, unearned people, earned but not enjoyed. Okay, all these are reflected in a personal income. I think it's clear. Yes. Now move forward. Next concept, right? That is okay. Right. Next one is disposable income, DI. DI. I think it's clear. Yes. So disposable income, right? It is ready to dispose. Ready to dispose. How right it is obtained to be right unearthed. You see, for example, a person is having 1 lakh rupees as income. Let us imagine. But according to right income tax slab, we need to follow 4 lakhs. Up to 4 lakhs, no tax. After that, 4 to 8, 5%. 8 to 12, 10%. 12 to 16, right? Like this. So whose income above 24 lakhs need to pay 30%. This income tax. For example, monthly 1 lakh means 12 lakhs. I think it's here. Yes. So that's why here he has to pay the personal income tax. I think it's here. Yes. So your total income which is earned by you, right, named as gross income, but that cannot be enjoyed by you. You need to pay the direct tax, that is PIT, personal income tax, isn't it? Right. For example, one person getting right per annum 1 crore. Let us imagine 1 crore income. Then he can't right dispose 1 crore income towards expenditure. Right? He has to pay the taxes. For example, personal income tax should be paid. Right? Okay. Then 1 crore means 30%. The next one is 4% cess is to be paid by him. Isn't it? Right? Then another one besides cess, he has to pay the surcharge also. Whose income exceeds 50 lakhs needed to pay the surcharge also. So PIT should be paid, cess is to be paid, right, surcharge to be paid. Okay. After payment of all these, some income which is presence can be disposed. For example, 1 CR. Let us imagine 1 CR, it is a gross income. I think it's here. He has to pay the right direct tax. For example, 10 lakhs. Let us imagine 10 lakhs. So 100 lakhs, nothing but 1 crore minus 10 lakhs is equals to 90 lakhs. It is ready to dispose. I think you understood. I hope you understood. Yes? Any doubt is there? No doubt. So income which is ready to dispose can be named as disposable income. I think you got clarity, right? Okay. Right. So that's why it is understood that disposable income, right, according to Mr. James Keynes, very, very important. Why? Because persons must dispose, persons must consume, right, persons must spend over goods and services, then only the person's life expectancy, person's yes, standard of living is increased. Isn't it? Right. That's why here consumption is very important. once you increase the consumption, your life expectancy will be higher. Low consumption, low life expectancy. We need to enjoy more goods and services to increase our livelihood, our life expectancy. You see, developed countries, their life expectancy around, you see here, 80, 85 years. Okay, isn't it? For example, in our India, soon after independence, our life expectancy only 32 years, now around 70 years. How? More than doubled. In 78 years of independence, India's life expectancy has been increased, right? Doubled, I think. The reason? The presence of goods and services increased in India. For example, if you get a disease in 1947, yes, the person ready to die. Why? Because no medicine good, no vaccine. But now, different types of medical facilities we have, right? Okay, test devices, medical devices we have to unearth the disease. I think it's clear. Yes, that's why just we need to enjoy with the more goods and services. So disposable means the income which is ready to dispose. When we dispose after meeting the taxes, so your personal income minus personal taxes, that is direct taxes, the residual income treated as, what is this, right? Disposable income. I think it's clear. Yes. So here it is understood that, okay, disposable income is equal to personal income minus personal taxes. I think it's clear. Yes. Personal income minus personal taxes. So, for example, you see here 1 CR your personal income, you need to pay the personal tax, direct tax. The personal tax nothing but direct tax, nothing but production tax, isn't it? Production tax, right? For example, 10 lakhs. Let us imagine. Then residual amount 90 lakhs, right, is the income which is ready to dispose. I think it's clear. Yes, I hope you understood. Okay, next move forward. So this is something about disposable income, very, very important, right? Okay, according to James Keynes here, right. So, right, you see here, for example, 90 lakhs. Yes, this is the income ready to dispose. In 90 lakhs, you can consume, for example, you can consume, then saving also. This is the disposable income. So your disposable income may be, right, convert towards, right, spending or consumer goods, and the residual amount is shifted to banks also. I think it's clear. So the disposable income may be used towards either consumption or towards right, savings. I think it's clear. Yeah. Now with this, right, yes, I have to do yes, conclude the disposable income. Then next concept, it is right, personal. After personal income, it is per capita income. I think it's clear. Yes. So what do you mean by per capita income? How we get, right, per capita income to be, right, discussed now. I think it's clear. Yes. So far what we discussed, disposable, right, income. Okay. So first the person has to meet the direct tax. The residual amount treated as dispose. So for example, disposable also may not be spent total disposable income over consumption, maybe shifted towards saving also. I think it's clear. Yes. Now move, that is per capita income. Per capita income. This is person's average income. Person's average income. How you get average? This is total by population. So division is needed, right, between national income and population, right? I think it's here. So right, right, national income by population, right. So for example, right, 100, yes, your national income, right, 20 population, per capita income, right, 5. For example, your national income, right, 100, your population only 10, then 10. Same national income 100, but population only 5, that is right 20. It is understood that as right population decreases, per capita income increases. So as population decreases, your per capita income is increased. This is the right logic we have. So here per capita income role is very, very crucial, right? Why? Because persons, especially standard of living is measured, and also countries also classified right into developing country, developed country, isn't it? So based on per capita income, not a national income. I think it's understood, right? For example, America is a developed country, India is a developing country, Bujumbura is the underdeveloped country. How we say? Based on per capita income. So per capita income is the benchmark income which shows the classification of nations, right, which is taking place among the nations. So it is very important. So increasement of national income not important. So enhancement in per capita income very, very important. That's why many more measures should be taken, right, to increase the per capita income besides national income. I think it's clear. Yes. So here it is understood that we have an inverse relation presence between population and per capita, right? Okay. So here, for example, you see, yes, NI growth rate minus population growth rate. Okay, then you get PCA growth rate. For example, national income growth rate 10%, population growth rate 5%, your PCA growth rate 5%. National growth rate 10%, your population growth only 3%, then your per capita income growth rate 7%. This is the growth rate formula of per capita income growth rate. I think it's here. Yes. So this is per capita income formula. This per capita income growth rate formula. I think it's here. Yes. So that's why NI growth rate minus population growth rate, the resultant can be shown as per capita income growth rate. I think it's clear. So if you wanted to increase your per capita income growth rate, your population growth rate must be reduced. I think it's clear. Yes, that's why here. Here now we should try to know one more thing to be right. That was right how right the countries are classified right with the help of per capita income. So we have a one benchmark classification which is done by the World Bank. It is, for example, you see 0 to $1135, okay, $1136 to $4495, then $4496 to $13,935. Yes, next one is $13,936 plus yes. Here low income country, this is lower middle income country, this is middle income country, this is high income country. I think it's clear. These three categorized right as developing countries. This is treated as developed country. So ours, see here 2878, it is the per capita income of India. That's why just we are at LMIC, lower middle income country. I think it's clear. Yes. So when we see the importance of per capita income, it shows the standard of living of the people, right? And classification of countries are done by the World Bank with the help of per capita income. And we need to increase the per capita income, but not national income. Why? Because national income is increased with fewer richer people, but whereas in the case of per capita not per capita income linked with the population. So NI by population, yes, the resultant treated as per capita income. I think it's clear. Yes. So it is understood that per capita income concept is very, very important. Okay, so you see, just we opted to reach Vikshit Bharat by 2047. Okay, accepted. But our per capita income must be jumped to 2,800 to 2,000 dollars. It is not an easy task for India. Of course, you see 2878 now, okay, in 78 years of independence, just we got 2878. But by 2047, we need to get $18,000 to $20,000 to be, yes, obtained to categorize India as a developed country, okay. Of course, nothing is impossible in the world, but everything is possible. But the thing is that the measures which are taken by the government must be complied, then only just we get the status of developed country. It is understood that, right? Understood that you, right, get standard of living with the help of, right, per capita as income. I think it's clear. Yes. So here with reference to concepts of national income, per capita income rule is very, very crucial. I think it's clear. Yes. Now we need to get right. Okay, we take another yes session, right? I have to conclude.